Welcome to this explainer. Today, we're decoding Northern Trust's dense but honestly absolutely fascinating Q2 2026 financial report. Now, if you've been following the financial sector at all, you already know these earnings dropped with some serious noise. So what we're going to do is strip back those anomalies, clear away all the distractions, and look right under the hood at the core engine of this financial powerhouse to see what's actually driving their growth.
Let's kick things off with a number that literally made Wall Street do a double take. $4.23. That is Northern Trust reported earnings per share for the second quarter. To put that into perspective, it represents a staggering 56% increase year over year. It's just a massive headline-grabbing figure. But, as we all know with earnings reports, the headline doesn't always tell the whole story.
Here's our roadmap for today. 1. The Q2 headline numbers. 2. Unpacking notable items. 3. Wealth management. 4. Asset servicing momentum. And 5. Capital and shareholder returns.
Part 1. The Q2 headline numbers.
You've got to just look at the sheer magnitude of this Q2 success. We're looking at total revenue on a fully taxable equivalent basis of $2.7 billion. That's up a very impressive 22% year over year. Net income? That came in at an eye-popping $792.2 million, which is a 51% jump. And get a load of that return on average common equity, an incredibly strong 25.9%. These are heavy-hitting, top-line figures that paint a picture of a booming, highly profitable quarter.
But to really get what's happening, we need to listen to the folks steering the ship. CEO Michael O'Grady stated, excluding notable items in the period, earnings per share increased 40%, and the corporation generated more than 700 basis points of operating leverage for the second consecutive quarter. This quote is absolutely key for us today. It bridges the gap between those flashy headlines and the underlying notable items we desperately need to examine to understand their real operational health.
Which brings us to part 2. Unpacking the notable items. So what was actually distorting those headline numbers? Well, on one hand, Northern Trust experienced a massive positive anomaly, a $525.4 million pre-tax gain from their participation in a Visa exchange offer. Think of that as a huge financial sugar rush. But on the other hand, they had several negative anomalies weighing down their expenses. We're talking about a $73.9 million loss from repositioning debt securities, a $61.5 million charge for software dispositions, and $51 million in severance-related charges. When we stack up the reported growth, that huge 56% EPS jump and 22% revenue spike, against the adjusted figures, the real story finally emerges. Even after we strip away that $500 million Visa windfall and account for all those strategic restructuring charges, the underlying adjusted EPS growth is still 40%, and adjusted revenue growth is a very healthy 13%. The core business is absolutely undeniably delivering impressive double-digit growth.
Part 3. Wealth management performance. Let's dig into their trust, investment, and other servicing fees within wealth management. Private wealth is completely dominating the space at $483 million. That's a solid 11% jump year over year, largely thanks to favorable market conditions. Now, the global family office segment brought in $109.1 million. And while that was down slightly from the previous quarter because of lagged asset values, the overall wealth management engine is clearly catching a lot of wind in its sails from strong market tailwinds and solid execution.
But past performance is just the rearview mirror, right? We want to see where they're heading, and the forward-looking drivers are what's really fascinating here. Their ultra-high net worth segment, we're talking clients with over $100 million in assets, is actually outpacing broader wealth, driving share gains in that ultra-vital tier. They're accelerating hires in critical revenue-generating roles. And perhaps most importantly for future growth, their marketing qualified leads spiked by 50% in the first half of the year. That points to a very healthy, super active client acquisition pipeline.
Part 4. Asset servicing momentum.
Moving over to asset servicing, we're seeing consecutive organic fee growth pretty much across the board. Custody and fund administration is up 9% year over year. Investment management grew by 10%. But the absolute undeniable standout is securities lending, which saw a massive 46% leap year over year. According to the data, this surge was driven by higher trading volumes and wider spreads. It's a fantastic indicator of really healthy, robust capital markets activity.
Now, I want to take a brief pause here because they just hit a monumental milestone. Northern Trust's alternatives assets under administration has officially surpassed $1 trillion. This isn't just a big number for the sake of a big number. It reinforces their clear category leadership in the alternative services space.
which is an area of the market seeing incredibly rapid client adoption right now. And to make sure they stay ahead of the curve, Northern Trust isn't just resting on traditional assets. Their asset servicing division is sustaining momentum through outsourced solutions like their integrated trading solutions. Plus, they're actively advancing digital assets. They're actually live on the Canton network right now, pushing forward with tokenized funds and digital custody. It shows clear strategic execution to future-proof their platform and stay highly relevant to what modern clients actually need.
Finally, Part 5, Capital and Shareholder Returns.
We literally have to start this section with a mind-bending figure. $20 trillion. That is Northern Trust's total assets under custody and administration as of Q2. It represents an 11% increase year-over-year, which management directly attributes to favorable markets and steady net client inflows. The sheer gravity of managing $20 trillion provides an incredible foundation for their overall market position and capital strength.
So how healthy is the foundation supporting all that weight? Incredibly robust, actually. They reported a standardized Common Equity Tier 1, or CET1 ratio of 12.2%, which is well above regulatory minimums. Their net interest income on a fully taxable equivalent basis was up a strong 11% year-over-year, hitting $683.1 million. And from a risk management perspective, a very reassuring 65% of their average deposits are covered by highly liquid assets. This is exactly what you'd call a fortress balance sheet.
And how does that fortress balance sheet actually benefit investors? Let's walk through it. First, they declared $148.8 million in common stock dividends in Q2, and importantly, the board approved a 10% increase to that quarterly dividend. Next, they repurchased $350.6 million of their own common stock. The end result? A very healthy 63% total payout ratio for the quarter. If you combine that with Q1, they've returned over $1 billion to shareholders in the first half of the year alone.
Which brings us to a really fascinating question to wrap up on. With a 10% dividend hike, 8 consecutive quarters of positive organic fee growth, and an incredible $20 trillion in assets under custody and administration, how will Northern Trust leverage this massive momentum to dominate the second half of 2026? The underlying engine is clearly firing on all cylinders, even after we've stripped away the one-time windfalls.
Thank you so much for joining me on this explainer today. Definitely keep your eyes on that $20 trillion, and I'll catch you next time.